It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, May the 9th, 2016. Another exciting newsletter for you tonight. We got crude, S&P, gold, and of course, the euro. Hope everyone out there, by the way, had a wonderful, wonderful Mother's Day weekend. Mom, obviously I said this to you last week. All the moms out there, happy Mother's Day. I hope you guys had a great weekend out there with family and friends. We're back here, though, once again. Another big week filled with learning and earning opportunities on this newsletter and in our trade room here at School of Trade. You know, today was Reaction Monday. That's the Monday following last Friday's non-farm payroll report. That told us to expect some big fireworks in the wake of such big news at the end of last week. Crude and gold have very strong bearish trends going into tomorrow's session, while the S&P and the euro are kind of stumbling around here, trading sideways inside of a range. We get a great plan for tomorrow. Before we jump into those charts and look at the schedule and the plan for tomorrow, though, I do want to remind you the only place to watch the full-length version of this nightly newsletter video is on our trading blog here at sidewaysmarkets.com. Make sure you're watching this video right now on our blog at Sideways Markets for the full-length version of this video. If you're on our YouTube channel, there's a link in the description of the YouTube video that'll take you over here to our trading blog. That way you can watch the full-length version with us here at sidewaysmarkets.com. While you're here watching the video, don't forget, grab a free pass. Come out and join me as a guest in our trade room. Grab a free pass in the upper left-hand corner if you're not a member here yet of School of Trade. In the lower left-hand corner, don't forget to register for our mailing list. I'll send you an email every evening before 8 o'clock Eastern Time. It's usually around 7:15, 7:30. I'll send you an email and let you know that newsletter video is ready to be watched. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Follow that link right below the video tonight on the blog, and that way you can have all the charts I'm using in tonight's video. You can have those ready on your own computer for tomorrow's session. And then don't forget, over on the right-hand side, you can learn more about what it means to be a member here at School of Trade. We get a free trial membership. You're going to learn more with me in 1 week on that trial than you will anywhere else on the web. I can tell you that much. And we usually have someone standing by 24/7, 365. I'll have to go restart our chat server. There must be a little glitch in the system. But typically, though, you'll see that will be available pretty much all day, every day. If you have any questions for us, use the live support on the right side of the blog. Hope you guys had a great weekend once again. Before we jump into charts here, let's check out the schedule for tomorrow. Tomorrow is the 10th day of the month of May. Boy, oh boy, we're flying through this month. We got the first full week under our belt. Going into the second full week here. Heads up, tonight we got major news out of China. If you're going to be in the Asian or early London session tomorrow morning, don't forget we do have some big news here out of China. We got the CPI here coming out of China at 9:30 p.m. Eastern Time. And then going into tomorrow morning session here, we've got some minor news you can see here coming out of Europe. Everything's pretty minor until we get to 10 o'clock tomorrow morning where we have that JOLTS report. JOLTS report, of course, being Janet Yellen's favorite news report. So 9:30 tonight, and then about 12 hours later, 10 a.m. tomorrow morning in the U.S. session. So those are your two big news events. Again, we have kind of a peppering of some industrial production numbers here coming out early in the European session. I don't think those are going to be too big of market movers. I think the big market mover is going to be what we hear out of China tonight at 9:30 p.m. And then very appropriate. Middle of the morning tomorrow, we'll be looking forward to JOLTS report, the job openings, layoffs, and transfer surveys tomorrow morning, of course, at 10 a.m. Eastern Time. Pretty empty day tomorrow as far as major news. So tonight at 9:30 from China, and of course tomorrow morning at 10 a.m. we got the JOLTS report. Don't forget, news is noise. Trade around that news. Don't go gambling your account away trying to catch those freight trains that happen after major news. What are we looking at here for crude? We got some relatively easy charts here on the schedule for this evening. Crude oil is bearish with a spike in channel down this evening, and the sellers do not appear to be backing down from selling back to the lows of the channel as we go into the overnight session. With such a strong bearish trend today, we would expect to see sellers taking profit at the lows, but looking at that last candlestick of the session, you can see it circled there, it doesn't look like anyone got out of their open short positions, which leads us to believe the sellers are still hunting for the low of that channel, right? Channel rotation back to the lows and that triple down support waiting just above 43, even at 43.10. Now, the ideal scenario, let's not confuse this. This is a bearish market, but we are very, very low right now. The ideal scenario for the sellers will be to sell after a bull trap above prior swing highs, and the buyers can't even think about trying to buy this market, at least not safely or reliably buy this market, until they can get a new high and hold a pullback. As you can see right now, we have three really, again, very simple charts here this evening. We got crude and gold, which are pretty much straight down, and the S&P and the euro are pretty much sideways. Technical clues here. First of all, we have a spike in channel. The spike in channel down right now. Spike in channel down. Now, what do we know about a spike in channel? Let's talk about this, because we do see these quite often with such volatile markets these days. There's a couple things I want you guys to remember about the spike in channel. First of all, follow the direction of the spike. In this case, we have a spike down. That's the first thing. The next thing is going to be the first three. 1, 2, 3. Those are going to be the most reliable areas where sellers are going to be looking to sell the high of that channel. After you see 1, 2, 3, now we look for the correction. The reason why we expect a correction is because at this point now, pretty much everybody's in this trade short. Everybody knows we're bearish. If you didn't know we were bearish after that spike down, again, excluding all the new traders out there, the experienced traders, right, they should already have found 3 opportunities to get short after that spike down. So the gig is up. There's no surprise, right? There's no element of surprise here. Everybody should be on the same page. This market is bearish. And when everybody gets on the same page and they know what's going on, what happens? Yeah, we usually see the exact opposite. Now, this is an example where, though, when I say the beginning here, focus on the direction of the spike, what we're looking for here is we're basically looking for a trap high is what we're looking for. The price is so low at this point that we want to wait for price to go higher, right? Because that's what's going to attract more sellers into this market. And what we're looking for is we're looking for the first pullback and the base of that channel. We call this the correction zone. Now, the correction zone is always going to be different because it's very much based on what the actual channel itself looks like. So it's the first test of the channel and the base of that channel. That's the correction zone. And then really what you're looking for you're looking for the buyers take it higher, and you're looking for, if you watch my newsletter, you know what I'm going to say here now. You look for failure into strength, strength into pullbacks, and then, of course, pullbacks all the way back down again. So what were those again? Again, focus on the direction of the spike. In this case, the bearish spike in channel. The first 1, 2, 3, right? The first 3, those will be the most reliable. Okay, I'm going to teach you more about exactly what we're looking for inside of our intermediate and advanced course here at School of Trade. But that's the basic fundamentals. And then again, after you see that break higher, remember, because everybody's already short, nobody's going to want to keep selling that low, right? Unless of course, you're a rookie trader, you don't know what you're doing yet. But for all the experienced traders out there, the experienced traders are looking to sell at a higher price, right? We need to entice them to get short with a higher price here. And that's, of course, why we're looking for price to go back into that correction zone. Once we get up to the correction zone, and I should also mention, too, that this could occur above a prior swing here. It doesn't need to go back to the correction zone, but that correction zone is where we expect it to go. If it can break through that correction zone, it's then going to be hunting for the beginning of the spike down, right? So the failure scenario here for the sellers is it goes right back to where it started from. All right, guys, so now back to the chart now, and now you can see what I'm talking about. There's that spike in channel down. Okay, there's that spike in channel down. Now, where would the correction zone be? The correction zone's going to be where? Right about, in all reality, you could say it's right about here, right? So why don't we shade that area in right now, right? And that's going to be our correction zone. Okay, so there's our correction zone. You can do this on your own charts. You can download my charts and do it as well, right? So there's my big old correction zone right there, okay? So now we know is we're looking for the first, right? 1, 2, 3. We've already got the most reliable. Follow the direction of the spike. We've got the 1, the 2, the 3. That means this one, although this may go lower, it's just lower reliability. Remember, as professional traders, we never have a guarantee of anything. We work in a world of probabilities. That means if I took 100 of this trade, right? If I was to take 100 of these, I would see about 40% winners, 60% losses. Where if I took 100 of these trades, right, one test back, it's going to be more like 60% winners, 40% losses, right? And of course, it's going to go higher as you go, right? Okay, so we know that we have 1, 2, 3 legs down right now, and so we're definitely looking for what we call a trap high. I want to see price move back to an area of resistance, move back to an area of resistance. What we really want for those sellers right now is to get me off of that low, right? So I can look for a buyer failure. Failure turns to strength, and strength, of course, turns to pullbacks as we revisit those lows again, right? So spike and channel, as we said before, you can go back and watch this video again if you need to. Look for the correction higher. And again, really the last line of defense for those bears will be 44.79. Right, 44.79. As we go higher here, the bulls are looking to hold a pullback, to take it higher, right? The bears, meanwhile, though, they're looking for those buyers to fail and sell it back down. The hard part, though, right now is we don't know where that failure is going to happen, right? We don't know where that failure is going to happen. So all we do know is wait for that correction for the most reliable trading opportunities and then sell into buyer failure. The second technical clue we see on the chart tonight is the pending channel. I take the low of this channel, I copy and paste it up to the high, and there is your pending channel high. We talk about these all the time, right, in this nightly newsletter, because when you see a big strong trend like this, you know, again, there's probably going to be some profit taking. Right, it's probably going to be some buyers that say it can't go any lower, right? I got to buy it. Even though I do disagree with that train of thought, you will see buyers who try to pick a bottom. You will see sellers that effectively take their profit, right? They liquidate, they cover their shorts, and so price will try to rise. What we're trying to do now is get that price up into that area of resistance, and then again, buyer failure into strength, strength into pullbacks, and then right back down. Also, too, don't forget, at that area of resistance, that's also where buyers are going to be looking to break out pullback, right? Break out pullback. We'll talk about that in just a moment here. Last but not least is a triple down off that opening range, right? Double down, triple down. That's the next area of support here at 43.10. The way it looks right now, that might be kind of the last hurrah for these sellers. We'll have to wait and see what happens after we reach there. But I would expect, though, that 43.10 should be a pretty easy target here for these sellers. The hard part is, though, is that do I really feel comfortable selling this low, right? Do I really feel comfortable selling this low? As you can see here right now. So let's play that game. What if price goes higher? What if price goes lower? As this price goes higher, buyers, you guys got to hold a pullback. But honestly, I don't think you're going to have a very easy job of this until you can get and stay above this 43.67 area, right? So really be careful if you're a buyer here right now. So really buyers want to see a breakout, pullback, hold, breakout, pullback, hold, breakout, pullback. All of these areas of resistance, can be used as support as long as we just get above them and hold that pullback. So buyers, you can't even think about buying this market until we see a new higher high and hold a pullback. Even then, you're going to see sellers selling into these moves going higher. The buyers, of course, if they fail holding that pullback, that's where sellers are going to jump all over this. It's very difficult to tell, though, where it's going to happen, right? Buyer failure, right back down, buyer failure, right back down. The big line in the sand, though, in my opinion, is going to be up here around that 44.80 area. If we can get and stay above that 44.80, there's a big old bullseye now right up at the high, right where this day began. Okay, this might just be one nice big pullback into a multi-day move heading into inventories later on this week, but we can't even entertain the buy side right now until we see a new higher high and hold that pullback. As of right now, we are uncomfortably low priced, which means sellers are going to be waiting patiently for price to get up off this low so they can sell it right back down. And again, look for buyer failure.